Okay, good afternoon. Let us come to a new topic today, bonus shares. All of you, please come to bonus shares. This is a very important topic. Almost in every exam, there is a question on bonus marks ranging from 4 marks to 8 marks, right? So, first we will understand the meaning of bonus shares. First, we'll understand the meaning of bonus shares. So, I want to ask from you, what is bonus share? Have you heard about bonus share? Have you heard about bonus share? If yes, please tell me what is bonus share. Student will answer, I will wait. Bonus shares are shares issued to existing shareholder. This is what one student is replying. Bonus shares are shares issued to existing shareholder without any consideration. One student is answering capitalization of profit. Very good. So therefore, the answer is bonus share means issue of free additional shares. Free means free, you know very well. What is free? No consideration is required to be paid to the existing shareholder of the company. Bonus share will be paid to existing shareholder of the company in their existing ratio. In their existing ratio. In their existing ratio. So, in short, bonus shares are shares issued free of cost. You can simply remember like this: bonus shares are shares issued free of cost. So, if you are a shareholder, you will smile. Okay. Why you will smile? Because you are getting shares free of cost. You are getting shares free of cost. So, all of you also smile at your home. Assume you are also getting some bonus share from me. Okay. Without consideration, you are getting bonus shares, right? Bonus shares are issued without consideration. Bonus shares are issued without consideration. That is why they are bonus shares. How does company issue bonus shares? How do company issues bonus share? Bonus shares are issued by converting the company's profit or reserves into share capital. So if you want to understand from an accountant's point of view, the journal entry, I will tell you journal entry in detail, but right now, suppose you have profit and loss account balance, or you have general reserve, then you will debit this account. So these accounts will reduce. And what will you credit? Complete the sentence. What will you credit? What will you credit? Anybody who wants to try? What will you credit? So you will credit which account? Share capital account. You will issue share capital account. Very good. So the student is correctly answering today. What have you eaten in the afternoon? All of you are giving correct answer. Tell me, what have you eaten in the afternoon? Share capital is right. Okay. So entry will be some reserve will be debited and capital will be credited. So a person holding 100 share will get more shares and his number of share will go up. Technically, it is also called capitalization of company's profit. Technically, it is also called capitalization of company's profit. One student is saying He has eaten Raj Kachori. Oh my God. Laddu, paneer, dal bati churma. My God. And how can you study dal bati churma and bonus share together? You will have a bad stomach after some time. Okay, dal bati churma and bonus share will not mix well with each other. Anyway, we will try to keep it simple for you and hopefully you will be able to digest. So what are the things we have learned till now? Bonus share are shares issued without consideration to existing shareholder in a certain ratio. Bonus share is paid out of the profits of the company. Profit or reserve will be debited, share capital is credited. Bonus share is also called capitalization of company's profit, right? One student is saying bati chokha. What is bati chokha? See, if you give me such options, I will not teach. I will come to your home and I also will have such nice and tasty lunches. So next point is issue of equity shareholder in proportion to their holding of equity shares of the company. Bonus share is issued to all the existing shareholder in certain ratio. Like for example, one share or one bonus share for two existing shares. One bonus share for two existing shares. ठीक है? So Mr. Kunal is holding 100 shares. Mr. Kunal is holding 100 share. How many bonus shares he will receive? How many bonus shares he will receive? Tell me, Kunal is holding 100 shares. How many bonus share he will receive? If the bonus share is one share for two existing share, which is also called 1:2. It is also called 1:2. So Nikita said 50, Lucky Agarwal 50, Falak Mehta 50, Jai Krishna JK 50, Sai Prasad, Lucky, Rajendra Pawar, Kartikeya, Indra Singh Jadeja, Wah Jadeja, Wah, my favorite player, Ravinder Jadeja, Gautam Saxena, Ramu. Okay, you are right. Answer is 50 shares. Answer is 50 shares. Okay, if you have any query relating to this chapter, only you ask me. Do not discuss other issues right now. A shareholder continues to retain his proportionate ownership of the company. This line is very important. A shareholder continues to retain his proportionate ownership of the company. What do you mean by proportionate ownership? Same percentage in total share capital. It means same percentage in total share capital. One student name is Abhishek Yadav. Wonderful. So the answer is same percentage in total share capital. So first you tell me, do you agree with this line that after the issue of bonus share, the shareholding of the equity shareholder in percentage term will remain the same? Is the statement true or false? Is the statement true or false? Shareholder percentage will remain same. Assume bonus ratio 1:1. Now I am going to give you an example. If a person is holding a certain percentage of share out of the total share capital of the company before bonus issue, he will hold same percentage after bonus issue also. That means percentage of shareholding before bonus issue will be same as after bonus issue. So those who have the notes, those student will take a pencil and write in the notes only. This is a company, okay, this is a company which have issued bonus share in the ratio of 1:1. It has issued bonus share in the ratio of 1:1. There are 4 shareholders of this company. A, B, C, D. A, B, C, D. And they are holding 10,000, 20,000, 30,000, 40,000 shares. What is the total share capital of the company? So write here total. If E is printed, you cancel. Make it total. Total share capital is 1 lakh shares. 1 lakh shares. Calculate the percentage shares held by A. Percentage shares held by A. A is holding 10,000 share. Total shares are 1 lakh. Percentage shareholding of A. Come on, percentage shareholding of A. Percentage shareholding of A. Take 10,000 divided by 1 lakh. 10% is right. 20,000 divided by 1 lakh. 20,000 divided by 1 lakh. 20%. Very good. Then 30,000 divided by 1 lakh. 30,000 divided by 1 lakh. 30%. 40,000 divided by 1 lakh. 40%. 40%. Is it right? Total 100%. So this is the percentage holding of A, B, C, D. Suppose this is a pie chart. A is holding 10% of share. B is holding 20% share. C is holding 30% share. And D is holding 40% share. Now what this company did, this company came out with a bonus issue. And each shareholder got for 1 share, 1 more share. 1:1 ratio means 1 bonus share for 1 existing share. Is it right? So first all of you again smile, bonus share. Big smile. You can show your teeth outside also. So how many shares A will receive now? Bonus share. Same number, 1:1. 10,000 plus 10,000. Now A is holding 20,000 shares. B will be holding 20,000 original share, 20,000 bonus share, total 40,000 share. C 30 plus 30, 60,000. D 40 plus 40, 80,000 shares. Is it right? So number of share now they are holding is double because they got same number of bonus shares also. So now dear student, tell me what is the total share capital of the company after bonus issue. Total share capital after bonus issue will be 2 lakh. Total share capital is now 2 lakh. You can add 20 plus 40 plus 60 plus 80. Okay. Convert into percentage. Convert into percentage. Now the percentage will be 20,000 divided by 2 lakh. 20,000 divided by 2 lakh. 10%. 40,000 divided by 2 lakh is 20%. 60,000 divided by 2 lakh, 30%. 80,000 divided by 2 lakh is 40%, and therefore 100%. Now you will be happy to note that the percentage shareholding does not change. A was holding 10% before bonus issue. A was holding 10% after bonus issue. Same thing for B, C and D. So bonus share does not affect the shareholding percentage. That was my point number first, and I have proved it with the help of exact numbers. Most of the study material, they only write a note, bonus shares does not affect shareholding percentage. So this example I have designed only for clarification why bonus share does not affect the shareholding percentage of individual shareholder. they will continue to have the same stake in the company what it was before. Is it right? So this is first effect of bonus share, that it does not affect the shareholding percentage. Second point, issue of bonus share, you will see in your book, issue of bonus share does not affect the total capital structure of the company. Issue of bonus share does not affect the total capital structure of the company. So then your query will be, what is capital structure? What is capital structure? So those who want to write down, capital structure means share capital plus reserves, plus reserves. That is capital structure of the company. Is it right? So this is how, let us see one example again. What is the bonus ratio? 1:1. Bonus ratio, again assume 1:1. These two columns, these two columns represent capital structure of the company before bonus issue. So slowly and slowly you will understand why bonus shares are issued and how does it affect various numbers. How does it affect share price, EPS? We will see one by one. Let us first do some warm-up exercise. The issue is right now, bonus share does not affect the capital structure of the company, and I have to prove that point. So to prove that point, I have written one example, that assume that bonus share is 1:1. Before bonus issue, the total shareholder fund was as follows. Share capital was 50,000 share of rupees 10 each, 5 lakh, and reserve was 10 lakh. Reserve is profit, general reserve and other reserves. Okay, so that is 10 lakh and total is 15 lakh. Total is 15 lakh. Now tell me first, if bonus share is issued in the ratio of 1:1, what is your existing share capital? 5 lakh. Bonus share of rupees 5 lakhs will be issued. Do you agree? If agree, say yes. If don't agree, say no. Bonus share of 5 lakh will be issued. Rupees 5 lakh will be issued. Bonus share of rupees 5 lakh will be issued. True or false? Yes. So students have agreed that yes. Now tell me, what is the impact of this entry? Journal entry. Reserve and surplus debit 5 lakh to share capital 5 lakh. To share capital 5 lakh. This is the entry the company will ultimately pass. What will be the effect on the balance sheet now? Effect on the balance sheet item, share capital is credited. Share capital is credited. So credited means your share capital will increase by 5 lakh. Reserve and surplus is debited. It will decrease by 5 lakh. So you add 5 lakh to share capital, you deduct 5 lakh from reserve and surplus. This is the effect of bonus share in your balance sheet. So I am going to write it for you now. So capital structure after bonus share, just make a correction in your note if it is mistake. It is after. Capital structure after bonus issue. Capital structure after bonus issue, Ramu is right. Share capital will be 10 lakh. Reserve and surplus will be 5 lakh. Padamja Satya is also right. Equity will increase, reserve will decrease with the same amount. Very good. Amazing. Wonderful. So you can now see these two columns. This is before and this is after. Total is not changing because it is just transfer from one pocket to another pocket. Both belong to shareholder only. both belong to shareholder. Is it right? Both belong to shareholder. It is like you have some money with you. Let us say you have this 500 rupees note with you. It was in this pocket, okay? And now you shift it to this pocket. Whether you have more money now or same money, 500 rupees was earlier in this head, now it is under this head, so your total will remain same. Say yes or no. Those who will give correct answer will get this 500 rupees note. Okay, new note. Yes, same. So please send me your bank detail. I will send you 500 rupees note. Next concept to be understood is bonus share does not affect the total earnings of the company. Bonus share does not affect the total earnings of the company. Bonus share does not affect the total earnings of the company. True or false? Total earning. Total earning means profit after tax. Profit after tax. Is it right? Total earning means profit after tax. Abhishek Yadav is saying, sir, give me this side. Okay, you give me your bank detail, okay? And you will get one OTP. You will tell me that OTP, whatever balance also you'll have, will become zero. Right? My question to all of you is whether total earning will get affected because of bonus share. The answer is no. Why? I will go to the previous table and explain it to you. This is the total capital of the company before bonus share. This is the total capital of the company after the bonus share. Total capital is same. Total shareholder fund is same. If total shareholder fund is same, you are going to get the same earning. If I start a business, suppose tomorrow you become C and you start a business with 15 lakh rupees share capital. Your another friend also becomes CA, he also starts the business with same 15 lakh of share capital. And both of you earn suppose 10% return on capital. So both of you will earn 10% of 5 lakh, that is 50,000. Now it doesn't matter whether he is calling it share capital or he is calling it reserve. When you are having 15 lakh rupees, you will earn same income before also and after income. Earnings will increase when you have more capital. Is it right? I am a small teacher, accounts teacher, only this much capital. Mukesh Ambani has this much capital. So his earning is more. My earning is low. That is because our capital is different. But if our capital is same, we will earn same return in same business. So therefore, total earning will not change. Total earning will not change. Then what will change? EPS will change. Earning per share is reduced proportionately. So today you are going to learn a new concept called earning per share. What is the meaning of earnings per share? Earning per share, that is EPS, is total earning divided by total number of shares. That is why it is called earning per share. Total earning divided by total number of share, that is called earning per share. Is it right? Now, whether earning per share will change? Yes. Earning per share will reduce. Earning per share will reduce. So one student is asking whether market price will be affected. I will tell you, wait a minute. First, earning. Market price will also be affected. How? Very interesting. But tell me, earning per share will decrease? Yes. Why? The numerator earning will not change, but the denominator number of shares will increase. So when your denominator base increases, the ratio falls. Is it right? See one example. Example on the screen. Total earning before bonus issue is 5 lakh. Assume number of shares 50,000. Therefore, EPS is 10 rupees. Calculation of 10 rupees, 5 lakh divided by 50,000 shares, 10 rupees. What is the bonus ratio? Bonus ratio is 1 is to 1. Bonus ratio is 1 is to 1 means if you have 50,000 bonus share here, how many bonus share will be issued? Tell me. Existing number of share 50,000. Bonus share 1 is to 1. Existing share 50,000, bonus share 1 is to 1. How many bonus share will be issued? How many bonus shares will be issued? How many bonus share will be issued? 50,000. 50,000 is right. What will be total number of share after bonus share? What will be total number of share after bonus share? Total number of share after bonus share. Come on. 50,000 already you have. 50,000 bonus share. So you'll have 1 lakh. Bonus 1 lakh share after bonus issue. That's right. Most of you got it right. Falak Mehta right. Tiwari right. Abhishek Yadav right. Yash Netankar right. Sumit Singh right. Rajendra Parwar right. Dhruv Tiwari right. Jai Shri MV right. 1 lakh. Sanket Jain right and Sakshi Gadi right. 1 lakh. Ramu is also right. So see the answer. What will happen to EPS? That was my query. Let us see. The answer is earning will not change. 5 lakh. Number of share will become 1 lakh. Sir, what is the working note of 1 lakh? 50,000 plus 50,000. EPS will be 5 lakh divided by 1 lakh. 5 lakh divided by 1 lakh is equal to 5 rupees. EPS will be 5 rupees now. EPS will be 5 rupees. Compare the two EPS. Compare the two EPS. First, it is 10 rupees. In our example, the EPS has become now 5. Why? Because earning is same. But you are dividing by 2 times the number of share which was before bonus issue. So earning per share will fall. Earning per share will fall proportionately. Earning per share will fall proportionately. Because the earnings don't change. Divide by number of share, this denominator becomes, earlier denominator was so much, now it has become so much. So ratio will fall. If you divide a number by a bigger number, the ratio will fall. That is why EPS will fall. Now your query was what will happen to market value of the share. So I am going to answer that query. What will happen to market price of share? What will happen to market price of share after bonus issue? After bonus issue, what will happen to market price of share after bonus issue? Now first I am going to ask the student, you have to give me the answer. Option A, no change. Option B, market price will increase. And option C, market price will decrease. And option D, none of the above, nota. So you will choose the right option. After the bonus share, market price will, option A, no change, increase, decrease, none of the above. None of the above, increase, decrease, or remain constant, same. Most of the students have answered C. But there is one D also. Sumit Singh D. Okay. Ramu B. Increase. Okay. C. Decrease. Decrease. Pratiksha A. A. Means no change. My God. Multiple choice question. Multiple answers also. But most of the answers are for decrease. The correct answer is, now I am going to highlight correct answer. A is not the correct answer. What about B? B is also not correct answer. What about D? D is also not correct answer. The right answer is option C, decrease. Okay. So now don't answer. It is D, it is decrease. Why decrease? Let me confirm why decrease. Suppose there is a company, okay, Ramu Limited. There is a company Ramu Limited. Ramu Limited has 1 lakh shares issued before bonus issue and its market price was 10 rupees. So that means the total market value of Ramu Limited share is 10 lakh. Total market value of all shares will be 1 lakh. 10 lakh. Total market value is 10 lakh. Ramu Limited issued bonus share. Issued bonus shares. So Ramu Limited have issued 1 lakh bonus shares. 1 lakh bonus shares. So you have to listen to me, then you will understand. What will happen to market price? Market price will decrease. So why? Let us see. Those who are asking why, understand. Now what is total number of shares after bonus issue? Total number of shares after bonus issue will be 2 lakh. Total number of shares after bonus issue will be 2 lakh. So what will be market price per share now? The market price per share will be total market value of the company will not change. Total market value will not change. Company is same. Company is same. Is it right? Company has only transferred from reserve to share capital. That does not mean the market value of the company will change. If by shifting 500 rupees from one pocket to another pocket, if I become rich, why I am teaching here? I will just transfer from one pocket to another pocket, one account to another account. Transferring money from one account to another account will not make you richer. So the total market value will remain 10 lakh, but you will divide by 2 lakh shares. The number of shares will double. Same logic like EPS. Numerator, this my left hand is numerator, this is denominator. Earlier denominator was small. Now denominator has become bigger. Numerator is not changing, denominator is becoming bigger. So your ratio is going to fall. Market price per share will fall proportionately. Market price per share will fall proportionately. So the answer is 5 rupees. Earlier it was 10 and now it is 5. Market price will fall and it will become 5 rupees. Okay. Now tell me one more query and then we will come to your chapter. Right now we are only discussing basics, not related to chapter. General knowledge about bonus share. Will a shareholder benefit from bonus share? Question is, will a shareholder benefit from bonus shares? Will the shareholder benefit from bonus share? Will your wealth increase if the company issues bonus shares to you? Will you become richer, more rich? Yes or no? So I will give you two options this time. Only two options. Shareholder will benefit? Yes. Shareholder will not benefit? No. So you will write and tell me whether the answer is A or B. Only two choices this time. So the answer is no. Abhimanyu, no. Rishu Mishra, no. Ramu, no. Tarun, yes. Sumit, no. Lucky, no. Rishu Mishra, no, no. One time no was enough. Indra Singh Jadeja, yes. Tushar, no. Yash, no. Sai Prasad, no. Padamja, yes. Sakshi, yes. Pratiksha, no. Santi Priya, yes. Jayashri, no. My God. Almost the world is divided in two parts. 50% yes and 50% no. Is it right? So I am going to prove that he is not going to benefit. The answer is no. The answer is no. Okay. Why no? Let me check. Let me explain. Suppose Govind Thakur. Govind Thakur is holding 100 shares before bonus issue. Before bonus issue, market price was 10 rupees. So the total value of his share, yes, Govind Thakur, what is the total value of your share? You are holding 100 shares at 10 rupees. 1000 rupees. 1000 rupees the value of share before bonus issue. After bonus issue, Govind Thakur will be holding 100 plus 100 bonus share is equal to 200 shares. So Govind Thakur was very happy, okay, that now I have 200 shares. But wait, don't be so happy. Your 200 share will now be multiplied by 5 rupees because market price has gone down to 5 rupees. The value of your share is still rupees 1000. The value of your share is still rupees 1000. Okay, so that is what my point is. Bonus share will not have an immediate effect on your net worth, on your personal wealth. Neither the company's capital employed will change, nor the shareholder's personal wealth will change. I can prove on the screen. Is it right? So it remains the same. Then why do company issue bonus share? When company does not get any benefit, shareholder does not get any benefit, then why do we issue bonus shares? And then why this chapter has come into existence? So for that, we have to now go to the next paragraph. Advantages of issue of bonus shares. Advantages of issue of bonus shares. Yes, everybody is right. Now concentrate. One student is asking now the shareholder will get more dividend. Okay, so I am going to explain that also. Earlier company's earning was 1 lakh rupees. It was divided by 10,000 share. So earning per share was 10 rupees. After bonus issue, number of shares will also double. So this will become 5 rupees now, earning per share. Assuming company pays entire earning as dividend. Assuming company pays entire earning as dividend. So the one who has asked this query that shareholder will get more dividend, the answer is wrong. Shareholder will not get more dividend. Why? Let us see. Earning per share is 1 lakh before, earning per share is 1 lakh after. EPS is 10, EPS is 5. So if Govind Thakur was holding 100 shares earlier, he was getting 1000 rupees dividend. Now Govind Thakur is holding 200 shares. but the company will pay him at 5 rupees because earning per share will fall. Therefore, the dividend amount also remains the same. Of course, if the company's earnings go up, then dividend will go up. But we have discussed bonus share will not affect the earning. Because of bonus share issue, your earning will not go up, and because your earning will not go up, your dividend will also not change. Then one student is saying for the purpose of liquidity, shareholder will benefit from market expectation. Why will company issue bonus share if the market value decrease? One student is saying that wealth will increase in future. Yes, very good. Wealth will increase in future. So now I'm going to explain the reason for issuing bonus share. Truly speaking, there is no real impact. There is no impact, truly speaking, because your total capital employed remains the same. Earnings remain the same. Total market value of the company remains the same. The wealth of the shareholder will remain the same. Then why do company issue bonus share? First is, there is a shareholder. Let us say this person is a shareholder. Okay. This person is a shareholder. He goes to the company's shareholders meeting. He is attending shareholders meeting, which is called general meeting. And there's the shareholder is asking the management. It is saying that please give me dividend. Please give me dividend. I need money. I am a shareholder. I am the owner. I am a stakeholder in the company. I am a stakeholder in the profit of the company. Please give me dividend. Okay. Now the management is thinking, if I give him dividend, I have to actually pay him amount in his bank account. But we don't have so much cash. But we don't have so much cash. Is it right? Then what they will do? They will say, sorry, we can't pay you dividend because we don't have so much of liquidity. One student had said liquidity, which means cash availability. But the shareholder is saying, no, I need something. Please give me. Oh, what we will do? We will tell him, don't worry. Don't worry. We are a very generous company. What do you think? We will give you shares free of cost. Go and enjoy. Okay. So instead of dividend, I'll pay you bonus share. A shareholder is thinking, yes, this is also good. Market price is 100 rupees, but he does not know that the market price may fall. Okay. So therefore, he is happy that I am getting bonus share because he thinks that I am getting something free of cost. He does not know that market price will fall immediately. So therefore he feels happy. And company is able to save cash. First reason for issuing bonus share by many companies, they don't want to pay cash, but at the same time shareholder is putting pressure on the company that please give me something. I am a shareholder. I have invested my money. I should get something in return. So to please, they can issue the bonus share. Okay. That is one reason. To conserve liquidity. To protect liquidity. Second reason. To keep EPS at the reasonable level. To keep EPS at the reasonable level. EPS means earning per share. Now suppose the earning of the company is 10 lakh. Earning of the company, total earning of the company is 10 lakh. You will continuously pay attention if you want to understand. This is not written in your study material because they don't have so much time to explain. Earning of the company is 10 lakh and number of shares are 1000. Number of share 1000. So what is the EPS right now? EPS is 10 lakh divided by 1000, so it is rupees 1000 per share. Earning per share is 1000. If earning per share is 1000, market price will also be very high, because market price is some multiple of earning. If earning per share is 1000, suppose the market price is 15 times of the earning, then it is called price earning multiple. Market price is how many times of earning? 15 times. For example, the price of the share of this company whose market value is 15 times of the earning will become 15,000 rupees. Oh my God. Market price of this company is 15,000 rupees. 15,000 rupees. Now you will tell me, per share, if you have to pay 15,000 rupees per share, will you like to buy this share? How many of you will like to buy one share for 15,000? Abhimanyu Singh wants to buy. First you tell me, will you like to buy the share for 15,000 rupees? Say yes or no. You are a small person, okay, don't have so much earning. You are a student, for example. Your parent will give you 2,000 rupees pocket money, and there is one share in the market. To buy one share, you need 15,000. You cannot buy. You will not like to put all your money in one share only. Is it right? Or you are an article student. Articleship stipend earning. Your monthly stipend is 3,000 rupees. To buy one share, you need 15,000. You have to put 5 months of your stipend at stake to get one share. So then what happens? Many shares don't trade in the market. The volume of trading goes down. The volume of the trading goes down. So how to bring down the market price per share? How to bring down the market price per share? You issue bonus share. When you issue bonus share, as we have seen in the example, the market price will fall. After the bonus share, market price will fall. When the market price will fall, it will have a wider marketability. Let us say company issues bonus share, and after the bonus share, the market price is now 1500 rupees. Company issued so many bonus share that market price is 1500 rupees now. Earlier it was 15,000. Tell me now again, how many of you would like to buy a share at 1500 rupees as compared to 15,000? How many of you would like to prefer to buy a share at 1500 compared to 15,000? Yes, the answer is right. Company will do this because it wants to increase trading in the share. The student is asking, why will company do this? Why company wants more trading to happen? Company wants more trading to happen so that share prices are realistically determined. Share prices are more accurately determined when you have large number of buyers and seller. When you have law of perfect competition, large number of buyers and sellers are there in the market, prices are more accurately determined, liquidity is more and more people would like to buy the shares of the company. People will have confidence that yes, once I purchase the share at 1500 rupees, tomorrow if I want to sell, I can easily sell also. So they will be attracted towards the company share. It becomes easy for company to raise funds in future. But if the share price is 15,000, once you buy, you may not be able to sell, because then you need to find a buyer who is willing to buy for 15,000 rupees. So therefore trading goes down. If the price is high, trading is low. Liquidity in the share is low. Trading is low. Low trading is not good for a share. Okay, investors like shares which are traded heavily. Low price, this 1500 rupees, trading volume will be high here. Trading volume will be high because people prefer to invest smaller amount also. Like for example, a student. In the classroom only we took the poll. Very few students said we want to buy share at 15,000, but most of you are willing to purchase a share for 1500 rupees. Is it right? That's right. So this is the reason for company to issue share. How will bonus share benefit the investor? Next paragraph. How will bonus share benefit the investor? It is in your book, right side. There are certain reasons. For example, one is tax benefit. When you receive bonus share, it is not taxed at that time. When you receive bonus share, when you receive bonus share, it is not taxed at that time. It will be taxed when it is sold, but you will sell it later. But if you receive dividend instead of bonus share, if you receive dividend, dividend is taxable. Yes or no? Dividend is taxable. Immediately you have to pay tax. Instead of that, company says, don't worry, you take bonus share, you don't have to pay tax now. You will pay tax when you will sell the share. Second reason is indication of high future profit. Bonus share will, if a company is issuing bonus share, what is the source of bonus share? Profit. Which company will issue bonus share? Which has higher profit and which also expect that the profit will be higher and higher in future years to come. So issue of bonus share is only a psychological advantage. Only psychological. You'll feel yes, in future the company will earn more profit. That is why it is daring to issue bonus share, because it is confident that even if I capitalize my profit, I will be able to get more profit in future. So shareholder will be happy. Third is increase in future dividend. This is question mark. If company's earning increase, for example, if company's earnings increase, then shareholder will get more dividend because he has now got more number of shares. If earnings increase, more dividend. So earlier a shareholder was holding 100 shares, now he is holding 200 shares. If the earning per share goes up, then his dividend amount will also increase because now he will be holding more number of shares. And the last point I have told you, it is same like this: high psychological value, mental satisfaction. If you are holding 5,000 share of a company, next morning when you get up, after you clean your eyes, okay, and after you do brush, you receive a message on your mobile, ting tong, 5,000 shares have been issued to you as bonus share. What will happen to you suddenly? Suddenly you will start smiling, okay. That is a psychological effect, that you are getting shares free of cost, okay. So these are the benefits to the investor. Really speaking, immediately there is no benefit. Immediately his wealth will remain the same. His personal wealth will remain the same. Company's total share capital will remain the same. Okay. After these two paragraphs, now we'll finally come to our topic in hand. Paragraph 1 and 2 was just a warm-up exercise to understand that what are the basic reasons for bonus share and how does it affect EPS, market price, shareholders' personal wealth, company's total capital employed. That is what we have understood. But this is an accounts topic. Therefore, we have to finally understand what will be accounting treatment of bonus share. Now, in order to do the accounting, first we need to understand the legal provisions, because for bonus share, there are legal provisions in Companies Act section 63, as well as there are SEBI guidelines, SEBI, Securities Exchange Board of India. Is it right? So there are SEBI guidelines also. We will first in next 15 minutes understand the legal provision. Concentrate. This next 15 minutes will help you to solve all your questions printed below that. Is it right? So are you with me? First you say, yes, we are with you. Then only I will proceed. You have to tell me, all of you, that you are with me. Those who are with me, say yes. Yes. Anshu, yes. Govind Thakur, yes. Tarun Soni, yes. Rajendra Pawar, yes. Falak Mehta, yes. Padamja Satya, yes. So all of you are with me. Shankar Mahamuni has written yes, and S he has written 8 times. Okay. And then Sumit Kundu has written yes 20 times. Your keyboard will break. Don't type so much. So we'll come to Companies Act section 63. This is there in your law subject also. But we are only going to look at this section from accounting point of view. So do not ask me too many legal questions. I am not a law teacher. Okay. So any legal question, ask your law teacher. I will only talk about accounting part of it. So first of all, we will see Companies Act. Section 63 says, company may issue fully paid up bonus shares to its member. Company is allowed to issue fully paid up bonus shares to its member in any manner whatsoever. Company can issue fully paid up bonus share to the members. So members are shareholder. Members are shareholder in any manner out of. So which reserve can be used for issue of bonus share? Companies Act has said bonus share can be issued out of free reserve. Oh, what is free reserve? Reserve available for dividend. Reserve available for dividend. That means those reserves which can be used for dividend payment. Again, in your law subject, you will study which reserves are available for dividend payment. Free reserves are available for dividend payment. Then second, the Companies Act also allows you to use securities premium account. Companies Act allows you to use securities premium account for issue of bonus share. That you will also study in the section on securities premium. There is some section on securities premium where you will study that securities premium account can be utilized for issue of bonus shares, fully paid bonus share, and you can also use capital redemption reserve. You can also use capital redemption reserve. So free reserve will include general reserve, P&L account, revenue reserve. These are the examples of free reserve. Revenue reserve, general reserve, P&L account, dividend equalization reserve. But you don't have to worry about what is dividend equalization reserve. This reserve is created for dividend only. This reserve is created for payment of dividend only. So it is a dividend equalization reserve. If in some years your profit is low, you can pay dividend out of dividend equalization reserve so that the company can at least maintain the amount of dividend and shareholder will feel happy that yes, the dividend is maintained by the company. Capital redemption reserve is created at the time of redemption of preference share and at the time of buyback of equity shares. Redemption of preference share is another topic altogether. We will take that separately. And buyback of equity share is another topic. Okay. So when you redeem preference share or redeem equity share, then as per the law, you have to transfer some reserve to capital redemption reserve, and capital redemption reserve can be used for only bonus shares. Is it right? So these are the three reserves mentioned by the Companies Act. So tell me once again, first reserve, free reserve, second reserve, securities premium, third reserve, come on, third reserve, louder, capital redemption reserve. They can be used for bonus shares. Now in your next line it is written in your notes, free reserve. Free reserve means such reserve which as per the latest audited balance sheet of a company are available for distribution as dividend. So as per the latest audited balance sheet, audited means which are audited by the auditors of the company. Every company is required to get its financial statement audited by the auditor. Can bonus share be issued out of revaluation reserve? Next sentence is on revaluation reserve. Now your query, I am already guessing, what is revaluation reserve? Revaluation reserve, it is created on revaluation of assets. Journal entry. Respective asset account. Suppose a land is revalued or building is revalued. Land account debit. Only you have to increase the value to revaluation reserve. What is the book value of the land? Book value of the land is suppose 1000, and what is the market value? Let us say 2000. So what some companies do, they say that in my books of account the land is appearing at 1000 rupees, but its market value is 2000. So my books of account is not showing proper value of land. Let us revalue. So what they will do? They will increase the value of the land by 1000 rupees. Land account debit 1000. But where will you give the credit? The credit will be given to a reserve called revaluation reserve as per accounting standard 10. As per accounting standard 10, property, plant and equipment, revaluation reserve will be credited. But you can see from this entry, this is just a book entry. Just a book entry means only debiting and crediting two accounts. But there is no cash realized here. There is no cash realized. Are you getting any cash here? No. It is just appreciation in the value of the asset. No cash is received. So therefore, Companies Act says revaluation reserve is not free reserve because you are not really getting it in cash. Only once the asset is sold. Once the asset is sold, that time you will realize cash and that time you can use it for bonus share. but not now. Now otherwise you will just create entry and issue bonus share. So don't do that. Don't use revaluation reserve for bonus share, because you can see on the screen below, you have just created a reserve by an entry, but it is only in the books, it is not realized. It is not realized. Once you realize it, yes, you can use it for bonus share, because when you realize it, it will go to P&L account, the profit, and profit can be used for dividend payment. So the answer for this question is in your book, next line, that no issue of bonus share shall be made by capitalizing reserve created by revaluation of asset. Next is, when can bonus share be issued? When can bonus share be issued as per the Companies Act? So next line says, company shall capitalize its profit or reserve for the purpose of issuing fully paid, underline fully paid bonus share when. So these are the conditions. Listen to me, I am going to ask you, when can the company issue bonus share? So there are some legal procedure you have to follow. First condition is, it must be authorized by the articles. Articles means article of association. Second, it has on the recommendation of the board been authorized in the general meeting of the company. Second condition is, board should recommend. Board of director, company is managed by a board of director. Okay, they are the top management people. They will recommend and shareholder will authorize in the general meeting. Condition number 1, let us revise. It must be authorized by article. Condition number 2, board must recommend and shareholder must authorize in the general meeting. Third condition is, it has not defaulted in payment of interest or principal. So should not be a defaulter. No default. If you are a defaulter company, chore company, badmash company, you are not allowed to issue bonus share. So no default in payment of interest or principal in respect of fixed deposit or security issued by it. So the law says, if you are not paying interest, principal on fixed deposit or debt or debenture, you are not allowed to issue bonus share. So company defaulting on payment of interest principal is banned from issue of bonus shares. Defaulters can't issue bonus share. Is it right? Next paragraph is, it has not defaulted in respect of payment of statutory dues of the company, of the employees, such as contribution to PF, gratuity and bonus. Same logic. What kind of nalayak company you are? The law is saying, you are not paying statutory dues of your employees. You are not paying PF of your employees, gratuity, bonus, and you want to issue bonus share, nothing doing. You can't issue bonus share. You are such a shameless company. This is shameless. Shameless company means company who don't pay the dues of their employees also, and they want to issue bonus share. It is like Vijay Mallya asking for issue of bonus share. Okay. And Nirav Modi wants to issue bonus share. And Jet Airways want to issue bonus share. It is like that. Should they be allowed to issue bonus share to shareholder when payment of bank, payment to deposit holder, payment of employees are outstanding? No, you are right. Your smile says everything. Okay. If the shares are partly paid, as per this section, if the shares are partly paid means shares of 10 rupee face value, but paid up value is only 5 rupees. paid up value is only 5 rupees. Paid up value is 5. Face value 10. Paid up value 5. This kind of shares are called partly paid shares. Is it right? So what they are saying, first let them make it fully paid. First let them make it fully paid. First let the shareholder pay the balance amount. Then you issue them bonus shares. So partly paid shares will be first made fully paid up. Then only bonus share will be allotted to them. Okay. So now based on our discussion, what are the 5 key points in Companies Act authorized by the articles, recommended by board, authorized by general meeting, no default in payment of interest and principal, no default in payment of statutory dues, and if there are partly paid up share, they should be made fully paid up. So what are the important points related to bonus issue? Next paragraph, next line in your notes. The company which has once announced the decision of the board recommending a bonus issue shall not subsequently withdraw the same. Board, once it has recommended bonus issue, cannot withdraw the same. Later on it can't change its mind. Okay. So once the board recommends about bonus issue, it can't withdraw the same. Later on it can't say no, sorry, I had never said like that, or I don't want to issue bonus share. Second is, bonus share shall not be issued in lieu of the dividend. Once the company has declared dividend, shareholder was waiting for dividend to come in the bank account. I was thinking that I have 5,000 share, company will pay 10 rupees dividend, I will get 50,000 rupees in my bank account, and now company says suddenly, dear shareholder, don't worry, we want to give you share instead of dividend. Not possible. Is it right? So that is how it is. So once the board commits, it has to honor the contract, honor that issue of bonus share. Now you underline this paragraph, which is very important. Third important point. Those who have highlighter, highlight. Those who don't have highlighter, buy, beg, borrow, steal, hire, purchase, lease, installment. Okay, but get it. A securities premium account and capital reserve account may be applied in the paying up of unissued shares to be issued to the members of the company as fully paid shares. Securities premium and CRR can be used only for issue of fully paid up share. Securities premium and CRR, these are capital in nature. Okay, these are like capital only. So they cannot be used for converting partly paid share into fully paid, but they can be used only for issue of fully paid share. They can be used only for issue of fully paid share. In other words, again underline. If you have scale, pencil, underline. In other words, securities premium account and CRR cannot be applied towards payment of unpaid amount on any share held by the existing shareholder. So what is the important thing? Securities premium, CRR can be issued only for fully paid up bonus share. However, it cannot be used for converting a partly paid share into fully paid share. Converting a partly paid share into fully paid share is also a type of bonus issue only. but you can't use securities premium and CRR. However, free reserve can be used. Free reserve can be used for converting partly paid share into fully paid share. Bonus share cannot be issued unless partly paid shares are made fully paid up. Underline once again, free reserve can be used for paying up amount unpaid on shares held by the existing shareholder. Bonus share, suppose a share is 5 rupees paid up rupees 5. Company has two choices. Company can either call 5 rupees from the shareholder, or company can transfer from reserve account to share capital account 5 rupees. Now this reserve which is used to convert a partly paid share into fully paid, this has to be free reserve only. This has to be free reserve because this money could have been given to the shareholder. Free reserve can be distributed to shareholder as dividend. Then shareholder will pay us the unpaid amount. Instead of that, can I convert the free reserve into share capital directly? So the two-way transaction can be avoided, because shareholder will say, you pay me dividend, then I will make it fully paid. So first company will pay dividend, then shareholder will make payment for call. Instead of that, why don't we convert the free reserve into share capital? That is easier. Yes or no? Say yes or no. Yes. So that is why free reserve can be used for converting partly paid into fully paid, but securities premium and CRR cannot be used, because security premium and CRR cannot be used for dividend payment also. Since securities premium and CRR cannot be used for dividend payment, they can't be used for converting partly paid share into fully paid shares. Okay. On a combined reading of both the provisions, now what is finally our conclusion? Free reserve can be used for paying unpaid amount on share held by the existing shareholder. Securities premium and CRR cannot be used for paying unpaid amount on the partly paid shares. Next, paragraph number 4 is issue of bonus share by the listed company. First of all, you tell me what is listed company. Listed company means listed on dash. Option A, ICAI. Option B, stock exchange. Option A or option B. Listed company means listed on ICAI Institute. Okay. Listed on SEBI. Option C, SEBI. Option C, SEBI. Listed on stock exchange. So the answer is listed on stock exchange. Listed on any recognized stock exchange. They are called listed companies. So that trading can be done. Why they are listed? So that trading on the share can be done. If you want to buy or sell share of a company which is a listed company, you can easily buy and sell on stock exchange. The example of two stock exchanges in India, the two most popular, BSE and SC. BSE is Bombay Stock Exchange, NSE National Stock Exchange. So let's say, for example, Reliance Industries Limited is a listed company. Bajaj Auto Limited is a listed company. Infosys is a listed company. Okay, like so many. If they issue bonus share, SEBI regulations will apply. SEBI regulation will also apply. First of all, Companies Act will apply because they are companies. but they are listed. SEBI is the body which regulates the listed company in India. SEBI is the regulating agency for listed companies in India. So listed companies in India, in addition to following Companies Act, they are also supposed to follow regulations issued by SEBI. That means they will not violate Companies Act and they will also not violate SEBI regulation. So they will try to follow what is possible within the overall guideline given by SEBI. One student is asking, what is SEBI? I think you must have studied this. SEBI, I forgot. Okay, so in the morning when I got up, I found that my left hand side memory was gone and SEBI was stored on the left hand side. So tomorrow morning I will answer. Okay. SEBI means, one student is saying Securities Exchange Board of India. That seems to be right. Security Exchange Board of India is a regulating agency, regulator for listed companies. Those companies which are listed on stock exchange, they have to be regulated by SEBI. There is a boss. SEBI is boss of listed company. Okay, I hope that helps you. So boss will tell them this you have to do and this you don't have to do. Okay. So let us come to SEBI regulations. What SEBI regulation says, paragraph 4, a listed company may issue bonus share to member. May issue, allowed. First condition is same like Companies Act, authorized by articles of association for issue of bonus share or capitalization of reserve. First point, same as Companies Act. Same as Companies Act. Second, provided if there is no such provision in the articles of association, the issuer shall pass pass a resolution. This is one word, pass a resolution at its general body meeting making provision in the articles for capitalization of reserve. Okay. Suppose your article of association does not have a clause on bonus share. So what you have to do? First you have to amend your article of association. Insert a clause for issue of bonus share. That is not a very difficult task. Third is same like Companies Act. Same like Companies Act. Companies should not default in payment of interest or principal in respect of fixed deposit or debt issued by it. Fourth is same as Companies Act. It says that it has sufficient reason to believe that it has not defaulted in respect of payment of statutory dues of employees. I have already said defaulters are not allowed to issue bonus share. Who are these defaulter? Who are not paying to the bank, FD, debt instrument, not paying dues of the employees. Okay, they are not allowed to issue bonus share. And then next point is also same as Companies Act. Partly paid share must be made fully paid up. Okay. Before issuing bonus share, partly shares must be made fully paid up. So you will say what is the difference? So first ABCD, there is no major difference. They are same like Companies Act, but the difference will arise now under regulation 93, or you make it 293. The correct number is 293. Just make it 293. Regulation number 293 is restriction on bonus issue. So it has put a restriction on bonus issue. Write down, very important. We will take a question on this after some time, which normally you will not get in other books. So an important question on this provision we will take after some time, once we complete the conceptual background. This is what we are learning is called conceptual background of bonus issue. Directly if I solve the problem and if this adjustment comes, you won't be able to understand. So that is why have some patience. Without understanding the conceptual background of the law, you will not be able to pass the entries. Is it right? So let us start. No issuer shall make a bonus issue of equity share. No issuer shall make a bonus issue of equity share unless it has made reservation of equity share of the same class in favor of holders of the outstanding compulsorily convertible debt instrument, if any, in proportion to the convertible part thereof. First of all, have you understood anything? Have you understood? Have you understood what is written here? If not, read again. Bouncer. One student said bouncer. One student said no, not understood. Tiwari, no. Yash, no. Why? Is it written in Chinese? Is it written in Spanish? It is written in plain English. You have to learn, interpret. One person saying repeat. What repeat? It is on the screen. No issuer shall make a bonus issue of equity share unless it has made reservation of equity share of the same class in favor of the holders of the outstanding compulsorily convertible debt instrument, if any, in proportion to the convertible part thereof. Yes. So if you have not understood, it means you were trying at least. And those who said we have understood, it means you have not fully understood. Not understood is the right answer. What is this point? Let us say Mr. Rohit Paul. Rohit Paul. All these names are the name of students only. Rohit Paul is a debenture holder. That means he has purchased the debentures of the company. Debentures are debt holders. They have provided loan to the company on which they get interest and it will be redeemed. Then one Mr. Abhishek Maharana. Abhishek Maharana. Maharana, only Maharana, not Pratap. So Abhishek Maharana is a shareholder. Okay, see the story. Maharana and Rohit Paul are both investor in the company, but Rohit Paul is a debenture holder and Maharana is shareholder. Maharana is shareholder. Okay. Company will issue bonus share to whom? To shareholder. Company will issue bonus share to shareholder. So Maharana will get bonus share. But what about Rohit Paul? He is a debenture holder. But these debentures are CCD. Oh, CCD. How many of you would like to come with me to CCD? CCD. Here CCD means compulsorily convertible debenture. CCD. Compulsorily convertible debenture. CCD. So what do you mean by compulsorily? Mandatory. It will be done. No choice. And what is convertible? Convertible means they will be converted into debenture. Convertible means they will be converted into equity share. Debenture will be converted into equity share. Convertible means debenture will be convertible into equity share. So compulsorily convertible means they will be compulsorily compulsorily converted into equity shares. That is called CCD, but not now, later, after 1 year, 5 years, as per the terms and condition of issue of debenture. So who is very happy? Abhishek Marana is very happy. This is Abhishek Marana's photo. Happy. Okay. And Rohit Paul, this is Rohit Paul, sad. Rohit Paul is sad. Okay. What is the meaning of Rohit Paul is sad? Rohit Paul is thinking that Abhishek got bonus, but I will not get bonus share because I am a debenture holder now. I will get equity share after 2 years. Then the SEBI says, Rohit, don't worry. Don't cry, Rohit. We are with you. Rohit say, how you are with me? When your company will convert your debenture into share, when your debenture will be converted into share, that time you will also get the bonus share. Wow! Now Rohit will smile. Much bigger smile than Abhishek Maharana, because Rohit will also get the bonus share. Not now, when bonus share will be issued to Rohit, Rohit is a debenture holder now. So when debenture will be converted into equity share, he will also get the bonus share. In what ratio? Same ratio. If Abhishek was given bonus share in the ratio of 1:1, on conversion, Rohit Paul will also get in the ratio of 1:1. Yes or no? Why Govind Thakur is smiling? You are not getting anything. Rohit is getting. Govind is smiling. Unbelievable. So I will just summarize. If a company has outstanding compulsory convertible debenture, then those debenture holder will also get bonus share on conversion in the same ratio in which equity shareholders have received the bonus shares. Is it right? Yes, immediately after conversion. If conversion takes place on 31st March 2026, then he will get bonus share also on 31st March 2026 on those equity shares which he will receive. Is it right? अब तो हंस लो रोहित भाई. Rohit is already smiling. Is it right? This was regulation number 292. You just change the number in your notes, 292. And this is 293. 293 now on the screen, previous one's 292. Restriction on bonus share. No, this is same 293 only. Next line, actually it is next paragraph. Can you please dictate? We will note it down. What do you want me to dictate? Rohit and Abhishek? So you note it down. I'll just try to simplify this legal language. It means debenture holder will also get bonus shares on conversion. It means debenture holder will also get bonus share on conversion in the same ratio as equity shareholder. As equity shareholder. This is very simple language. It means debenture holder will also get bonus share on conversion in the same ratio as equity shareholder, as equity shareholder. But this debenture holder should be CCD debenture holder, bracket CCD. Other debenture holders will not get, because unless it is converted into equity share, they will not get the bonus shares. So it is applicable to CCD only. CCD debenture holder. So those who will go to CCD will get bonus share also. Understood? Noted? Please say yes, we have noted. There is one next paragraph below. It says equity shares so reserved for the holder of fully or partly compulsorily convertible debt instrument shall be issued at the time of conversion of such convertible debt instrument on the same terms or proportion at which bonus shares are issued. Same thing. Suppose today on 31st March 2021, bonus shares are issued. Bonus shares are issued to equity shareholder. On this, there is a question in our notes, numerical question, but later. Bonus shares are issued to equity shareholder in the ratio of 1:1. On 31st March 2025, CCD are converted. CCD means compulsorily convertible debenture, are converted into equity share. They will also get bonus share. They will also get bonus share in the ratio 1:1. They will also get bonus share in the ratio 1:1. They will also get bonus share in the ratio 1:1. They will also get bonus share in the ratio 1:1. Okay. And it is also applicable to partly convertible debenture, PCD. What do you mean by partly convertible debenture? Suppose debenture is of rupees 1 lakh, half of it will be converted into share, and for remaining half cash will be paid. That is called partly convertible debenture. And if debenture is of 1 lakh, it is fully convertible into shares, 1 lakh rupees will be fully convertible into share, then it is called CCD, compulsorily convertible debenture, or fully convertible debenture. So PCD means partly convertible debenture, FCD means fully convertible debenture, CCD means compulsorily convertible debenture. Okay. So if debentures are of this type, their holders will also be entitled to bonus share, so that justice is done to them. Why is this provision? This provision is to give justice to. This is to give justice to CCD holders. This is to give justice to CCD holders. Justice for CCD, hashtag justice for CCD. We want bonus. We want bonus. Okay. Capital reserve, can it be used for bonus issue? There is a query from a student. Capital reserve, if realized in cash, can be used for bonus share. So the answer for capital reserve is, which I am going to take later, capital reserve, if realized in cash, can be used for bonus share. But if capital reserve is not realized in cash, then it cannot be used for bonus shares. Okay. So what I was saying, that this is done to give justice to debenture holder, because they also have expectation from the company. So to protect the interest of debenture holder, this clause number 293 was introduced. Now there is a regulation number 94. It is 294. Just can you correct it to 294. Now SEBI law says bonus share only against reserve if capitalized in cash. Because the student had asked me a query, can capital reserve used in pre-incorporation profit, capital reserve used in pre-incorporation profit be used for bonus share? The answer is no, because that is not realized in cash. SEBI law says only reserve which are realized in cash can be used for bonus share. Very important paragraph, tick mark. Very important tick mark. We are going to solve question and it will be mentioned there whether this reserve is realized in cash or not realized in cash. So what the student will do? The student will have to check carefully. Bonus share made out of free reserve, built out of genuine profit, or security premium collected in cash only. Oh my God. SEBI regulation says security premium collected in cash only, free reserve which are created out of genuine profit can only be used for bonus share. Reserve created out of revaluation of fixed asset will not be used for bonus share. Bonus share cannot be issued in lieu of dividend. Okay. So these are the 3 points one by one. This point is same as Companies Act. Once you have announced dividend, now you can't tell the shareholder, take bonus share. Revaluation reserve cannot be used for bonus share, same as CA, Companies Act. But this point is different. So you should take a highlighter. This is highlighter. Companies Act says security premium can be used for bonus share. SEBI regulation says security premium realized in cash can be used for bonus share. What will the student do now? So the answer is, if it is a listed company, then security premium realized in cash can be used for bonus share. If it is unlisted company, non-listed company, then security premium, whether realized in cash or not realized in cash, can be used for bonus shares. Do you agree? So I will just make a small summary for securities premium. Securities premium, listed company, securities premium, listed company, unlisted company. Simple words. Only if realized in cash, only if realized in cash. Unlisted company, whether realized in cash or not. So the treatment of securities premium is different for listed and unlisted company. Student has to check in the question whether the company is a listed or unlisted company. If it is unlisted company, then it does not affect your answer. You can use securities premium. But if it is listed company, then only that much securities premium which was received in cash can be used for bonus share. Okay. Next point, any query related to only this chapter. Okay. So now I have told you some important points in a box like structure in your notes. So important note number 1, as per SEBI, securities premium realized in cash can be used for bonus share. But Companies Act 2013, there is no such requirement. So for listed company, we have to check securities premium realized in cash. For unlisted company, it may be realized in cash or it may not be realized in cash. Next is in accordance with section 52. Section 52 deals with securities premium. Securities premium may arise on account of issue of share other than by way of cash also. Yes, possible. Securities premium can arise without cash being raised. Then in that case, unlisted company can use it for bonus share, but listed company cannot be used for bonus share. Thus, for unlisted company, security premium not realized in cash may be used for bonus share, whereas the same cannot be used in case of listed company. So let us revise one more time. Listed company security premium realized in cash can be used for bonus share. Listed company security premium not realized in cash cannot be used for bonus share. Unlisted company securities premium realized in cash can be used for bonus share. Unlisted company securities premium not realized in cash can be used for bonus shares. Is it right? SEBI is more strict. SEBI is a stricter body because it wants to protect the interest of the general shareholder. So company should use bonus share only if it is realized in cash. Okay. One student is asking how can securities premium may arise other than by way of cash. Oh, wonderful. Suppose you have purchased a machine. Okay. Suppose Tarun Soni has purchased a machine. Tarun Soni Limited purchased a machine for rupees 1,10,000. It issued 5,000 shares to the vendor. Face value of share is rupees 10. So what will Tarun Soni Limited do? Tarun Soni Limited will say machine account debit 1,10,000 to share capital 50,000, because 5,000 into 10 and to securities premium will be 60,000. Excess over and above face value. Excess over and above face value. Excess above fair value. Is it right? This is an example of securities premium received other than cash. Can you find any cash entry in this? Machine account debit 1,10,000 to share capital 50,000 to securities premium 60,000. So this is an example where security premium is credited but cash is not received. If it is an unlisted company, the 60,000 can be used for bonus share, but if it is a listed company, the 60,000 cannot be used for bonus share. Next point, consequent to issue of bonus share, write down, very important. This line also very important, you will find in your notes, okay, in a box with gray background, that consequent to the issue of bonus share, if the subscribed and paid up capital exceed the authorized capital, a resolution shall be passed by the company at its general body meeting for increasing the authorized capital. Suppose you have issued capital. Suppose issued capital is 1 lakh share. Bonus share issued. Bonus shares issued is again 1 lakh share. So total shares, now total issued capital is 2 lakh shares, but the company's authorized capital, authorized means registered capital, maximum capital which the company can raise is only 1,50,000. So there is a problem. And what is that problem? The problem is that your issued capital cannot be more than authorized capital. So what the company will have to do? Company will have to change its authorized capital. Company will have to change its authorized capital. So company will pass a resolution in the annual general body meeting or general body meeting, and they will get the authorized capital raised. So when you are solving a question, please listen to me. When you are solving a question and your issued capital after adding bonus share exceeds the authorized capital, increases more than authorized capital, then the student will have to change the authorized capital at least equal to issued capital. And you will write a note that it is assumed that the general body has increased the authorized capital. On your own, you assume that general body has authorized the increase in authorized capital. Is it right? Say yes. After last 15-20 minutes, nobody has said anything. What has happened to you? Have you gone into sleep mode? So first let me check, are you awake or not? Say yes, we are awake. Unless you say we are awake, I am not going to explain. Okay. So you are confirming you are awake. So can we now go to our main task for the day? Accounting entries. Accounting entry for issue of fully paid bonus share. Point number 1. When the company has to issue fully paid bonus share, the company can use capital redemption reserve, company can use securities premium, or company can use any other free reserve. So I will first see what is the instruction given in the question. Follow the instruction. Follow the instruction given in the question. So the question will tell you which reserve is to be utilized, which reserve is not to be utilized, and accordingly you will utilize that reserve. If the question is silent, then we will follow this sequence. First we will use CRR. If that is exhausted, if that is complete, not there, then I will use securities premium. If that is also not there or exhausted, then I will use free reserve. Under free reserve, we will first use general reserve and then use P&L account. So what is the sequence we will follow? CRR, securities premium, general reserve, P&L account. Okay. Or we can also use capital reserve if realized in cash. If realized in cash. So these are the 4 or 5 reserve we will use. However, if you are converting partly paid share into fully paid share, then don't use CRR and securities premium. So right now my first point number 1 is for fully paid bonus share. Entry. First I will sanction the issue of bonus share. Sanction issue of bonus share. Once the AGM sanctions the issue of bonus share, company will first create a provision for bonus shares. So here I am going to pass two entries. First entry will be capital redemption reserve account, CRR. Capital redemption reserve account is my first priority because CRR is created only for issue of bonus share. CRR is created only for issue of bonus share. So now the day has come to utilize it. If that is not sufficient, securities premium, because security premium also has a limited use. Security premium also has a limited use. Okay. One student is asking why we are not using security premium in case of partly paid share. That I have already explained. Okay. Security premium is not used for partly paid share because in case of partly paid share, I have to receive money from him. So if I am giving him bonus share out of security premium, it is indirectly use of security premium as a dividend, indirectly. Free reserve can be used for dividend payment. So if I capitalize free reserve in case of partly paid share, then it is okay because this free reserve in any case was supposed to be transferred to him and then he will invest back in the company. But security premium was never meant to be transferred to the shareholder as a dividend. Hence, security premium cannot be used for partly paid share into fully paid share. Then you debit general reserve, P&L account, any other divisible profit. Any other profit which can be distributed. Divisible profit means which can be distributed. Which can be distributed as dividend, okay, to bonus to shareholder. And then the next entry, bonus to shareholder account debit to equity share capital account. Bonus to shareholder account debit to equity share capital account. So that is the reason for, that is the entry for issue of bonus share. But there can be situation where you have to convert partly paid share. Suppose paid up value is 5 rupees and you want to convert into fully paid up share of 10 rupees. Then in that case, you can only use free reserve because free reserve in any case was supposed to be given as dividend to the shareholder. So you first pay dividend, then you receive call money. Instead of that, you can convert the free reserve into share capital. So the entry will be now, you see the entry, I have not used CRR, I have not used securities premium. I have only used general reserve, debit, P&L account, debit, other divisible profit account, debit, to bonus to shareholder. So this is upon the sanction of the issue of bonus share. I will create a provision for bonus to shareholder. But because call money is due from partly paid shareholder, I will pass an entry, share final call account debit to share capital account, being final call money due. Okay, being final call money due. This is the entry you pass for making a final call. Being final call money due, and now adjustment of final call. The only difference between what you have learnt in issue of share chapter in 11th, 12th or foundation or BCom is that you used to pass the entry bank account debit to share final call. Now bank will not come. Bonus to shareholder account debit. bonus to shareholder account debit to final call account. This way, bonus to shareholder account will get cancelled. Share final call account will get closed. What is the net effect? The net effect is reserve will be debited, and share capital will be credited. Okay, but we will not pass direct entry. Student will ask me, instead of 3 entries, can we pass 1 entry? Institute will not allow you to do that. So we will not do that. If you ask me in my individual level, I will do. Okay, but in the institute exam, pass 3 entries for converting partly paid share into fully paid share out of free reserve. First, you will create a provision for bonus to shareholder, make the call, and then adjustment of final call. So these are the 3 entries we will pass. Sources of capitalization. Okay, next line. Wait a minute, this is not required. Today I am going to dictate one question. So now the time has come to solve question answer. So everybody, please write down the question. Please write down the question. Following items appear in the trial balance of, without delay, start. Following items appear in the trial balance of Saral Limited. Following items appear in the trial balance of Saral Limited as on 31st March 20x1. As on 31st March 20x1. Right hand side rupees 4,500 equity shares. 4,500 equity shares. $4,500 equity share of rupees 100 each, 4,50,000. Securities premium in bracket collected in cash, underline collected in cash, means it can be utilized, 40,000. Capital redemption reserve 70,000. Capital redemption reserve 70,000. Come on, next. General reserve 1,05,000. General reserve 1,05,000. Profit and loss account is 65,000. Profit and loss account 65,000. Write down the company has decided to issue equity shareholders. Company decided to issue to equity shareholders bonus shares at the rate of 1 share for every 3 held. 1 share for every 3 shares held. 1 share for every 3 shares held. Company decided that there should be minimum reduction in the free reserve. Company decided that there should be minimum reduction in the free reserve. Pass necessary journal entries. Pass necessary journal entries in the books of Saral Limited. Pass necessary journal entries in the books of Saral Limited. Okay. So the question is about bonus shares. One share for every 3 share held. One bonus share will be issued for every 3 share held, and there is a restriction on you. The restriction is underline or highlight. Company decided that there should be minimum reduction in free reserve. Company decided that there should be minimum reduction in free reserve. That means there are two free reserve in the problem, general reserve and P&L account. We will use them minimum. These are free reserve. So I will first use securities premium and CRR. If this is not enough, then we will use general reserve and P&L account. Is it right? Say yes. So first thing first, write down answer. Answer, write down number of bonus shares to be issued. Very easy question, problem for the beginner. Source of the question is your study material. Okay, bonus share question from study material. 1/3 into 4,500. So you will say 1,500 bonus shares. 1,500 bonus shares. 1,500 bonus share. And then below that write down value of bonus shares. Value of bonus shares is 1,500 shares multiplied by face value rupees 100. Always multiply by face value 100 rupees in this example. So this is 1,50,000. It is 1,50,000. First you tell me whether these two lines are understandable. Then I will proceed further. Number of bonus share 1,500. Number of bonus shares 1,500 and the value of the bonus share is 1,500 into 100 is 1,50,000. If this is understandable, we will go ahead. Say yes. Tiwari yes. Tushar Kumar yes. Sonam Bagmare yes. Tarun Soni yes. So see, first you understand with the help of this diagram, how much is the value of bonus share? The value of bonus share, as you said correctly, 1,50,000. So what will be my source? Source number 1, I will use CRR. But CRR is only 70,000. CRR is created for bonus issue only. Hence, we will use CRR. Are we converting partly paid share into fully paid share? No, these shares are already fully paid up. Second, I will use securities premium, but that is also only 40,000. That is also only 40,000. There is a shortfall. There is a shortfall. So now, who will come? General reserve will come or P&L account will come. So usually we will use general reserve. Actually it does not matter, but you will use general reserve, and that is balancing figure. and that is equal to 40,000. That is equal to 40,000. So this way I have identified the sources of bonus issue. Is it right? I have identified the sources of bonus issue. Since shares are fully paid up, CRR and securities premium can be used. Can be used. Can be used. Note we have written since shares are fully paid up, CRR and securities premium can be used. Second note, write down as securities premium is realized in cash, it can be used for bonus shares. It can be used for bonus share. It can be used for bonus shares. As the securities premium is realized in cash, it can be used for bonus share. Written? All of you have written? Then I have to go to next page now. Then point number next, write down note whether listed company or unlisted company, whether it is listed company or unlisted company, question mark, whether listed company or unlisted company, question mark. So no information available, no information available. Assume listed company, assume listed company. Okay. For this question, if you assume unlisted company also, your answer is same. For this question, even unlisted assumption can be made. Now write down books of Saral Limited, journal entries, journal entries, two columns on the right side, debit and credit. Date. Now date is exactly not given. What is given is balance sheet of 31st March. So what we will do, we will take the next date, 1st April 2000 X1. Anyway, it doesn't matter. So don't bother much. What we have decided, we will first use CRR, account debit. How much we have decided? 70,000. Securities premium account debit. How much we have decided? 40,000. 40,000. Capital reserve, not capital, my mistake. General reserve. General reserve account debit 40,000 to bonus to shareholders, to bonus to shareholders account 1,50,000, to bonus to shareholder account 1,50,000, to bonus to shareholder account 1,50,000, being provision for bonus issue, being provision for bonus issue. Only this much narration is enough. If you want to write more, you can write more. Then next you write down bonus, same date write down 1st April, bonus to shareholder account, bonus to shareholder account debit 1,50,000 to equity share capital account 1,50,000 being bonus share issued, being bonus shares issued, being bonus share issued. So this is the answer of this question. Did you enjoy? First you tell me. Did you enjoy? Yes. Nobody enjoyed. Why? You're not mentioning yes or no. Oh, yes, very much. Yes. Double S. Triple S. One is enough. Done. Okay. Now one query has been asked by a student. Is it always right to assume listed company? No. Whatever helps you to solve it in a simple way, you can do it. Is it right? So you can either write listed or unlisted, but you have to see which will simplify your answer. Follow that and write an assumption. So today we will try one more question. Please write down a very small question. One more. One more. Okay. Following items. Please write down the question. Following items, little fast. Following items appear in the trial balance of Bharat Limited. Following items appear in the trial balance of Bharat Limited. Now this time it is written a listed company, underline, as on 31st March 20x1. As on 31st March 20x1. Right hand side rupees. Quickly, same problem, one more practice. 40,000 equity share of rupees 10 each. 40,000 equity share of rupees 10 each. 4 lakh. Capital redemption reserve. Capital redemption reserve. 55,000. Securities premium. Securities premium. Collected in cash underline 30,000. This I can use because it is collected in cash. Listed company can use securities premium only if collected in cash. General reserve 1,05,000. General reserve 1,05,000. General reserve 1,05,000. Surplus, that is credit balance of P&L account. That is credit balance of P&L account 50,000. The company decided to issue to equity shareholders. The company decided to issue to equity shareholder bonus share at the rate of bonus shares at the rate of 1 share for every 4 held. Bonus share at the rate of 1 share for every 4 held. This time it is 1 for every 4 held, and for this purpose it decided that there should be minimum reduction in free reserve. It decided that there should be minimum reduction in free reserve. Pass journal entries. Pass journal entries. Pass journal entries. Okay. So first you will write down answer. Same to same question. Number of bonus shares to be issued. Number of bonus share to be issued 1 by 4 into 40,000 is equal to 10,000 bonus shares is equal to 10,000 bonus shares, and value of bonus shares, value of bonus shares 10,000 into rupees 10 face value. This is 10 rupees. So that is equal to rupees 1 lakh. That is equal to rupees 1 lakh. That is equal to rupees 1 lakh. Now what I'll do, I will check which reserve I can use. There is a restriction in the question, minimum reduction in free reserve. So first use CRR, then use securities premium, remaining balance 15,000 use general reserve, some portion of general reserve. Okay, up to this you have done. So now I will identify source of bonus share. Identify source of bonus share, and I need rupees 1 lakh for this. So first I will catch hold of CRR, but CRR is only rupees 55,000. Then I will catch hold of securities premium, that is only rupees 35,000. That is only rupees 35,000. And then I will use 3 balancing figure. What was the balancing figure? 15,000. Write down general reserve 15,000. Write down general reserve 15,000. So this will help you. Note right down, since it is a listed company, securities premium realized in cash can be utilized for bonus issue. And second note, write down, as shares are fully paid up, CRR and securities premium bracket realized in cash can be used for bonus shares. First we should use CRR only. First, if given a choice, we will use CRR only. Capital reserve realized in cash can be used later. First priority to CRR only if we have as a student choice. Now what we will do, we'll pass journal entries. Is everybody ready? Books of, this way you will present the answer. Books of Bharat Limited. Remember, if you write properly, you'll get full marks. You will also come in merit list like me, but then you have to also put same amount of efforts, okay? Otherwise, you will just keep dreaming. This way, if you can present, nothing like it. Format should be drawn: date, particulars, debit, credit. Now, which is the date of bonus share? Not given. Take the next date, 1st April 20x1. Okay. Whether securities premium is collected in cash or not. If not given, write assumption. Write assumption and solve accordingly. Normally, we will assume security premium is collected in cash if the question is silent. 1st April 20x1, what we have decided? CRR debit first. CRR account debit 55,000. Next, we will use securities premium because the question says don't use free reserve much, 30,000, but this is not enough. So I have to also use general reserve account debit 15,000 to bonus to shareholders. To bonus to shareholders 1 lakh. Being provision for bonus shares, and then one line blank, same date, nothing is given about date. You will write bonus to shareholder account debit 1 lakh to equity share capital account 1 lakh, being bonus shares issued. Close the format. Being bonus share issued. Being bonus share issued. Being bonus share issued. This answer is over. So thank you very much for watching this video. Hope you enjoyed. See you in the next lecture. Tomorrow, same time, same topic. All the best. If possible, revise and come tomorrow. Thank you very much. Have a good day.